Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey Felix, how's it going?
Mr. Marco, how you doing, buddy?
Good. How are you?
Good. And almost the end of the week.
Yes,
What do we
been a
say?
turbulent one, hasn't it?
A little bit. What's cooking? What do you see? What are we thinking?
Cooking. What are we thinking? Can I brag myself
You
a
happy?
little bit?
Well, you happy?
Yeah.
You happy about the Oracle? Are you happy that you got a little bit out of the Oracle at least?
Yes.
Okay.
I did exactly what you said with that strategy we talked about, I think, a couple of days ago, and I was able to buy the ones I sold to make some profit there, and then come in at a better position than I was at, and I increased my positions to a full position.
Okay.
Mm-hmm.
Cool. All right. So
Which is
what
great.
I would say is sometimes you don't have to do it on the same day. You could take your time, because the minute the market moves and the market's it's off a little bit. So most people should have taken a third off. You only had one, so you do this strategy. If you could wait a day, because that 80 call that you sold will probably come down a little bit more as a couple, in the next 24 hours, you'll see it. Even if the stock goes up, that 80 calls is not going to move up that much. So something to think about it for the next time, but that's good. You did what you're supposed to. Yeah, you did what you're supposed to do. You're in the name. There's 5-6 months to go. And this market is obviously explosive. I think there's a couple of things in the news, but the ECB president Lagarde, she's out there saying she's going to buy bonds. They're raising the inflation. It's interesting. They're raising inflation estimates, and then in the same, on the other side of her mouth, she's saying, I'm going to go buy more bonds. It shows you how stuck the world central banks are, that they can't allow inflation going up should make the interest rates go up, but interest rates go up can actually slow an economy that's not even off the ground yet. So they're really stuck. Someone is pushing the wrong buttons are being pushed. We've talked about the bonds and the S&P and the rebalancing and the macro backdrop, and I'm just going to keep pushing this story because it is a big story. It should be the story over the next 4 or 5 weeks. It's going to be bonds versus S&P, that spread, rebalancing. It's going to be taxes. Okay, it's going to be taxes, and I think, I think it's important. Let me show you the graph, because I think to show you how. When people ask me, when do I sense danger? How do I sense danger? How should you sense danger? I think one thing to think about is this is the TLTs, right? So this is bonds.
Yep.
Okay. It was only, well, let's look at first the SPY, because we'll look at the SPY. We all know where the market was last week. So last week it was March 4th and March 5th. Okay. March 4th and 5th. We were trading near 372. Right? March 4th and 5th, 372. And the story was inflation and interest rates, and how interest rates could hurt growth. It's going to hurt. Interest rates would hurt the fantasy stocks. And that was here. March, you could see March 4th, March 3rd and 4th. And the TLT was about 139. And 5 days later, the TLT is still at 139. Okay, TLT is still at 139. And we have the stock market up 6%. So this is like, to me, this is what danger looks like. We talked about potentially the market going to 400, 405, 410. It's going to find its level where it wants to go. I don't know if it's going to get there tomorrow, the next day, or whatever. But that was a real possibility after it did this sort of dance for 3-4 days. So you have this market screaming higher, and we have to sort of think about what the backdrop is always, and we can't always follow what the news is saying. We have to take the factual parts of the news and make our own minds on what's happening. Right. So again, you showed me a meme. I don't know if you have it, but why don't you show? Do you have that meme? That I want you to actually show that to give you a sense of how this could all play out, so we're on the same page.
Yes. Let me just pull it up
when you get it.
Oh, just a second. Yeah. Oh,
I think it says it all. It's in one sentence. I think it says it all.
Yes. Okay, I'm pulling it up. All right, here it is. Wall Street Bets. I'm just gonna share my screen real quick so you can see it.
Go ahead.
All right, and here it is. All right. Just
a reminder: if you buy $1,400 worth of stocks today, the U.S. government will pay you back in cash. Brilliant. To me, I look at that and I go, that about sums it up right there. And again, we're talking about, okay, stimulus checks are going to go out, they pass it. What comes first, the chicken or the egg, right? You have the checks in the mail, or the pension funds rebalance. If you took both, they're probably about equal, right? 200 billion, whatever you want to call it. We're give or take 50 billion at this point. Who cares, right? But it's huge amounts of money to buy, huge amounts of money for sale in equities. And then 2 weeks later, you got this tax event that I don't think people have pulled out their money just yet to pay something a month from now. So they probably have that money still in the market playing, and they're going to pay it. They're going to get out of it and pay it sometime near April. So you have these 3 different events where there's a lot of cash and a lot of inflows and outflows. Sure, if you take the aggregate, you might get a little bit of a sale. Maybe it's on a little bit, who knows? But the point that I'm trying to say is it doesn't happen that way. What happens is one of those 3 happens first, then the second one happens, and then you have the third. And so when you have this, if it's this check money goes into the market first, then the rebalance goes into market second, then the third is the tax. You could see how this thing goes straight up and then could go straight down. And that's what I'm scared of. That's what I'm looking at the market saying, this is actually quite scary. So I think it's important. It's very, very important. If you have never looked at bonds, if you have never looked at the US dollar, if you have never, I think now is the time to sort of just look at that. If I look at, again, just go back to the TLT, and you go to the TLT and you got this looks really bad. This doesn't look like it's just going to shoot up to 147. It might, but it doesn't look like it. Right now, it looks like it's basically made this huge drop. It tried to do it here first, and now it's kind of sunk back here to about the 139. It breaks 138. This thing could trade 136, 135 in a collapse. You got to be concerned about that. You have to be concerned. If this thing goes from 138 to 135, what do you think is going to be happening in all the news medias? What do you think they're going to be saying? They're going to be talking about interest rates and bonds, and they're going to be talking about how the bond market is collapsing, and people can't even explain what's happening. These are, I'm reading professionals who've been in the bond market for 30 years have never seen anything like this. They just can't explain what's actually happening. So there's something happening. I certainly can't explain it. But what I will say is that by looking at these things, by understanding these things, you can sense that something might be wrong, that something is not working properly. And to me, that's danger. That's danger. Okay. So when I see the market jump up 5-6% from the lows, and then nothing else in the world really, is moving in that way, then, it starts all becoming a little bit too, who was that buyer? Was it the plunge protection team? Was it the United States government coming in and doing their, we want to save the market here, bring it back up. It trades at a new high. You could see that the volume is not terribly inspiring. You look at the volume here, it's only half a day or 2/3 of the way, not even 50 million shares. But over the last, let's call it 5 days, you've had 100 million, 125, 150, 200. These are massive volume days. This is a volume day that might not reach 75, might reach 75 to 100. So I think it's telling. I think that you have to respect what's actually happened here and try to respect the news. So we'll leave it at that. I'm harping on this at the beginning of every episode because it's that important. Because if you want to know what danger looks like underneath underneath the engine, that's what danger looks like. Danger looks like the bond market is not healthy. The bond market's a lot bigger than the equity market. And in 3 Steps to Profit, and actually in the free membership, I give you this, the warning sign of the top 1%. I think it's a great video, but it shows you and it gives you some context as to bond, FX, and equities. And when the financial market happens, it's really the bond market that was shaky, and then the equities just fell off a cliff. So if the bond market's a little shaky here, it should rattle the equity market pretty damn good. I see it going a different way right now, which is, it is what it is, but it's important to understand this for sure. 100%. So with that, let's go to my favorite name that I just can't keep my eye off, that I saw something today. Facebook. So we've been talking about this Facebook and how, we're generally looking for value names. At least what I'm looking for. Anybody can play whatever they want, but I'm looking for somewhat value names that have a little bit of growth, that have some story behind it, but real companies these days with some story. And Facebook is one of those, right? It has a lot of negatives with the antitrust and things that have happened in the last 4 months, but the stock is relatively cheap and value guys are coming in. Today we're seeing some volume, decent sized volume here in, what is this? Let's see. The 300s here. Okay, we've talked about the 300s, 9,000 of the 300. There's some open interest there, but to me, it's it looks like it was buyers over here in the early morning here in the first half session. Volatility's come off a little bit as maybe the buyers it looks like they dropped off and maybe people taking a little bit of profits. But I don't think the implied vol is going to go down too much in Facebook, so it could only go up.
Right.
So if you get this super high, a big move, you can actually make money on implied volatility and the stock. I don't think that. I think 30 in this environment, 30 is a good barometer, if you will, for a stock like this. Everything's trading 40, 50, 60. Facebook, it can move when it wants to move. It can move. I don't think people want to sell it sub 30, but that's just a volatility perspective. But up here, again, we've looked at the chart. We've looked at it a dozen different ways. We're looking at this level, 280, and the market looks like it's trying to catch a move higher. We'll see what happens. Frankly, I'm a little nervous in market, so I suspect that this might take a little bit of time here, but I just wanted to keep pointing this one out. This one is something that's interesting. I don't put it in premium because mainly because the options are too expensive for us to be buying one lots. It's if they cost $13 an option, the ones that I want to buy, $15, $16, I'm not going to give that to people because people, not everyone, but many people don't have, $1,500 to buy one lot. If you're going to buy 3, then that would be, $4,600 out, $5,000 per shot. So, but I like this one. I just want to give that to you, and I like it. It leads me to some of the other ones that I've seen today. I know you probably have a few, but I just wanted to point out Visa, MasterCard. I mean, we've been talking about this since right around here, 207. Tell you I love the name, but can't buy it for Options Geek. Same thing. It's $200 name, but the stock looks. You talk about Visa, MasterCard. When I think about Visa, MasterCard, I see them have some pressure with fintech, Square, PayPal, whatnot. But at the end of the day, it's Visa, MasterCard. They're in transactions. The economy is going to open up. These things are, they're potentially explosive after, just look at the chart. You can see here, let's look at the weekly, this chart right here, after it pops up from March, does this 215, 190, 185 sort of range for 5-6 months, right? 5-6 months. It's breaking out of this range here. And, we were talking about it right around 205. I think this can go to 260, 240, 260. It's already 228, but at the time at 207, we were talking 240, 260. this has legs, you know, same thing. Visa, MasterCard should be close to the same chart, close to it. Let's see if it's close to the same chart. MasterCard, you know, you're talking about 365 to 280 range. So it's 85 points, 85 plus 365, you're talking about 450, you know, 450 up here. So this is how things can move. They can move significantly if the market cooperates. If the market is going to trade 405, 410, these things are going to explode. So this is two names that I'm looking at. And you see today, we are seeing some Visa call buying. Let's look at Visa, not Vale. It looked like June 230s. It looks like these are coming in here early in the morning to buy. So you had a spike up in vol, these to buy. So again, people playing this breakout, jumping on Visa payments. You know, we have our own payment here in this Fiserv. Similar chart. This one, value guys in this name, which is interesting. And this one's interesting, guy. Value guys and momentum guys in Fiserv, right? And that's always a great combination, right? Because you got guys who see something that's going to make this explode, and then you got value guys going, this is a cheap stock anyway. So if it explodes, great, I'm in it. But this is a name that's starting to trade well. I'd love to see a little bit more volume by the end of the day here. It's had a big move over the last 4 weeks. Let's look at the daily. So this is the breakout of 122 here. I would like to see a little bit more volume, frankly, but I have this probably stall at what, 129. You know, 129 you might see a stall 130. So something to think about. Hopefully that gets us about 110% there. You can take a little bit off and comes back into sort of the 120. You can either buy that one back if you want, or just hang in tight there. But this is Fiserv is a payments type of name. It's transactional with the banks as everything opens up. They're processing things for the bank. So that's Visa, MasterCard, and Fiserv. What else? What are you looking at?
Cool. All right. We got one from Brenda actually. CSTM.
Oh, I know this name. What
You
is
want
it?
to take a look at the
something like that?
Yes, Constellation. She said on CNBC, John Najarian pitched GMIA and CSTM. Can we look at those options? So CSTM,
I do see, yeah, the GMIA I see today too. Is an African name. It's like an African transaction name, e-tailer. CSTM. Okay, so good volume here. I guess the first thing I see is, you see the volume?
Yes.
So I don't know if there's an announcement, but let's just let's look at the chart first.
And guys, make sure you like the video and also comment any questions you have and any UA you found like this. This is great.
This is to close. Okay, so sort of 12 seems to be the level here. 15 breaking out here today. On great volume, right? So there's got to be an announcement. Something happened here today. We could definitely take a look at the options here, but I would say 12 and 15, 18, you know, $18. I don't, let's go back for a second. I want to see, where's this stock coming from? Give me some history on this name. That makes a little bit more sense over there. Let's just go back 5 years. Okay, so if we went back 5 years, 10 years, it looks like it went back 10 years. Okay, so clearly this IPO price here, open from that open, and you see here 15. So, you know, here, broke here, tried to get up over here, came down here, same thing here, and now we're breaking out. So this seems to be a big level 15 for the stock, right? I think that's clear to see. Talking about something up here. And then obviously here. Without knowing anything about the name, I would say you have the 50-day moving up. See here, trying to cross the 200. That would be a positive development. And MACD just kind of floating up positive. Okay, so looks good to me. It looks like money's coming into the name here. especially right here. You see that volume, and from a historical perspective, it looks like $20 sort of is where this thing will maybe meet some resistance. $20. So given that, what are they buying?
Look at May 17th.
Yeah, I like it. I can just see already. I see what they're looking at. May 17th. Okay. Paying. Wow, it is a little bit high though as far as vol, but looks like they 6,000 and then more 4,000. Gotcha. Okay. I don't know the full story in this, so I'm not sure if there's a earnings sub-estimates reports, first quarter announcement, cash tender. 161. There was a spread here, so 6,000 of these was in a spread with what? Oh, so something's going on here. 15, 17, 15, 17. So it looks like the 15s here, they're just shifting. So the stock's up, breaking out. They might be selling out of these. My guess would be they're selling out of these and buying these, right? So they're
Okay.
selling 9,000 to buy 15,000 on the move higher is what I'm guessing. But let's just take a look to see if that was more on the offer. 249. Get me 15 calls, 249. 50. Yeah, you see at 11 o'clock, it was trading 260, 255, 249. 249 traded it was 71, 71, 72, 70 and a half, 71. So it looks like my guess, and I would have to, again, go back into the history and see each individual print, but my guess is that this was an actual sale to take in some premium, sale of these to take in some premium and put it all back into here in a bigger way, Someone's getting aggressive. And in general, you like to see that. Okay. So by the way, this and this is probably also connected. So 15, 20, it might have been a call spread. Okay. But someone is now maybe taking some of this money off the table and buying these, but it looks like they're getting more aggressive. That's what I would say.
Right. I
All
see.
right. Is that fair?
Yeah, definitely.
You see
Cool.
that? Okay. So I think it looks interesting. I like it because I'd have to look at the story more, but 2 out of the 3 pieces look pretty good to me, where they're breaking out this 15 level on good. Let's go to the daily. Tell me a little bit better. And let's go to this thing averages 1 to 2 million shares, and today on a breakout here, it's showing 5 million shares. So I like it. If the market comes off, I'd love it better at 15 and a quarter. So if you're going to get into it, save some bullets, because it could easily come back to, this is a sharp move. 1, 2, 3. It came from 14 to 16. It could easily come back right to like 15 to 15 and a quarter, and you'd want to take a shot buying it there as well. Okay, you'd want to take a shot buying it.
Right. Okay.
You follow what I'm saying?
Yes.
I like it. I like it, but I'm not going to throw it all right here. I'm going to, do 2/3, and then say, okay, I'm going to leave some bullets so I can buy another third down here. And then I'm going to stop myself on volume, a break of 15, say to like 14 and a half or something like that. Or I'm just going to use the price of the premiums.
I see. Okay.
Okay. So that's I don't think this stock should trade 14 and a half. Okay, on big volume. If it is, then there's a little bit of trouble, and you should probably be thinking about your exit here.
Oh, really? Okay.
You understand? You see the dynamic?
Yeah.
It's sort of like, this is telling you that this is, remember, when it goes above, when it's a breakout above 15, it's basically saying this is a new buyer here. Somebody is saying, I'm going to buy this stock, CSTM, here, and he's a first time buyer. Unless, of course, this is a big short, and I have to check the short interest, but I don't think so. But someone is saying, whatever the news was today, I'm going to buy, and I think there's value here. And this hasn't been bought since we saw it years ago at 16. So these are new buyers. It's big volume here. And this was a sign here too. You see the sign here, the next big volume day was about 2-3 million shares. And this was on March 3rd, this day here. Okay, so that was big volume day. So yeah, it looks good. That 2 out of 3. I would then go look at the earnings conference report. I would see what the CEO is saying. I try to figure out what's going on with the trends, what trend it's in specifically, and maybe why specifically. Is there a product that people are excited about? That's how I would look at that. But
Okay.
it looks good. I don't mind that one. The
Nice.
GMIA is a crazy one. It's all over the place. We'll leave that for another day.
Yeah, and I'm only seeing 1 week options being bought, so that's
Yeah.
we'll leave that.
Okay, good.
Great. Oracle, we just talked about it, but
Oracle,
I'm
we
seeing
talked
some
about?
buying again. I think they're repositioning now.
Oh, really?
If you want to take a look at it, yeah.
This is one where I think people should. I think value investors are saying, what are you going to kill the stock because they missed a number? They missed a number by a few pennies, whatever. And Ellison is out there again. I mean, the guy's a talker. He's a master. I don't want to say master manipulator, master storyteller. And he basically is out there saying everything is good. Don't worry. The best was, I'm not going to tell you why, but man, things are going to explode in July. It's like, it's a beautiful statement. I'm not going to tell you why, but in July, everything's going to explode higher.
Right.
And I just thought to myself, what a way to now you can't even ask the question. What do you mean by that? Like, I told you, I can't tell you, but it's going to explode. And so, I think it's interesting. I think I love listening to him speak, and I saw him back in the day in New York a long, long time ago, and he was much younger. Still looks good for his age, but much younger. And I just thought this guy is one of the best storytellers I've ever heard. I mean, he has me saying Oracle, chanting Oracle. So I like him as a hypester. Okay, so he's my guy. He's my storyteller. He's the leader. I don't mind that. I don't mind him selling that story. But yes, I do see here that the April 16th. There's volume in the 65, 67, 70, 72s. Things are down here because obviously the IV is down because earnings came out. And so it sucks out some of that implied volatility. It's not a problem if we think that the stock is, going to materially higher than this 67. If they can get their head on straight for the second half of the year and cloud starts showing, like he said, come June, July, things start popping up, you can get a very big move in this name as people, as long as the stock stays still and people looking at this, they want, when the market is not going rah higher, what happens is people start putting pen to paper and they say, I like a stock like Oracle that it's a real company, has earnings and it's starting to grow. It's in the cloud. It's beating the cloud. If they start, I'm sure what will happen is, if right now you can't see his numbers, Ellison, right? He's very slick. Sometimes he breaks them out. When he's doing well, he breaks them out. When he's not doing well, he's sort of like everything gets meshed into. Oracle has a lot of revenues. How much is the cloud doing specifically these areas? You can't figure it out. But I'm sure as soon as it starts doing well, he's going to be all over those numbers and he's going to say, oh, by the way, we're separating our cloud business so you could see the cloud business by itself as its own business. And then people say, wow, this cloud business, just a cloud business, you can relate that to this stock or that stock or Snow, whatever you want to relate it to. And then people get excited and say, Oracle's got to be worth a lot more. Look, this little cloud business is worth X. And so he's good like that. So if it's true, in June, July, you might see them separate their cloud. And then in the next earnings, he's going to be rah. We're doing this. This is what we got. This is how you value it. And he's off to the races with his story. I don't like the way the stock has dropped like this, just as in the near term. So, we have longer term options because, frankly, I didn't expect it to move that quick. That's the reality. But if it does, I'll take it, right? You take the third and you're in it. We expected it. We're here and we're expecting it to go up to 75, 80 over the course of time. And we're looking for Larry Ellison to do his thing and to make Oracle great. And he's competing against big guys, but he's a big guy himself. So I like the stock. I like the story. 1 quarter is not what we're really investing in. We're investing in this cloud business to be valued like everything else is valued. Right. That's what we're investing in.
Okay.
Okay.
Cool.
Good.
Nice.
So that's Oracle. What else are we
Now,
looking at?
let me throw a question at you that Water Traveler asked, I think 2 3 days ago. I'm not sure. So this is what he
Go
said. I'm
ahead.
just going to read it because I don't have it here. Seeing a rise in open interest for UAL over past 5 days via Market Chameleon, wondering if you could add color to how institutions might quietly enter positions to purposely avoid UOA.
Okay. I would say, look, it happens. Like they, every once in a while you'll see they might try to do something. I'm always watching for that in the back of my mind. I do watch for it. I do watch for tricks or something that smells a little funny, and I'm saying, that doesn't smell right, or that's I guess the experience that I'm looking at. But I would say it's not at the front of their mind. I don't think that we're looking at it. We're looking at UOA. We're extracting value. We're looking at UOA a lot differently than most people. A lot of people look at UOA. They try to make money in 10 minutes. They buy it and they're chasing 30 different names. That's not what we're doing. We're looking at it. We're researching. We're playing the board, and I think that it's definitely. I would say it's definitely not at the forefront of their mind. So they're going to do what they want to do. If they're looking at calls, it's because that every once in a while in a situation that might be tricky, they could use options in a way that, especially if it's a crowded trade. What do I mean by crowded trade? Everybody's leaning long a certain way or leaning short. They might say, okay, well, instead of throwing out, a put buy, as long as they have to borrow, why don't we short the stock and then buy calls, out of the money calls? And that's going to give this impression that, oh my God, we think the stock's going up, but really we actually shorted all this stock and bought these out of money calls. It's the same thing I told you as the in the money put. And every once in a while, I think that's what's going on. So when I see that way out of the money put, way out of the money call being bought, the way out of the money call, and we see it and it's out of the range and people spending $1, I always think to myself, are they really short? And they're just buying these calls to protect their short, which is the same thing as basically buying deep in the money puts, right? So they're leaning short really, but they're giving this impression to the market that everybody starts chanting, online, did you see this call? Did you see that call? Look at these calls, these way out of the money. He's buying 20,000. He might be short 2 million shares against those 20,000 calls. So
Right.
you might not get the right answer there. Right. And so I'm always careful with that. I'm always looking at those things. And frankly, the tool, when it's out of that range, that's when my mind starts really thinking, wait, why is he so far out? Why is he so far out of the range? That's why the tool helps in a sense to give you an idea of where they should be. And when they're outside that range, start thinking twice. Like, what are they really doing here? Okay, so that it's a good question. I think the way they come in, sometimes they don't mean to hide, but they buy in inside the mind of a hedge fund video. You'll see I show you a clear picture of how the hedge funds buy stock, and same mentality with options. Sometimes it's just that they're buying as they're looking at price. They're looking at $2 for this option, and if I can get it for $2, I'll pay $2. I think it's going to be worth $8. And so, it goes to 180, they buy some, it goes to 250, they hold back, it comes back down. Okay, buy a little bit more, it comes back down to $1.25, buy another 2,500. So they're averaging in to a bigger position. Some of them do it just exactly like that. And it's not unlike how I'm showing you how to do it, right? It's, you're buying it, you're buying it because you want to be in it. But if the market comes off, you want to save a couple of bullets and you can buy a little bit more, and you're managing that entry. So I wouldn't say that they're doing it on purpose to try 99% of the time. They're not doing that. However, that 1%, and we see it here where, look, they're buying way out of the money calls or way out of the money puts, and we're like, what's really going on there? We see what's going on. Okay, we try. Usually it's the way out of the money calls is a more of a signal that the guy might actually be short. That's
Nice.
that's more from experience that I'm, when I see a way out of the money put, that could be someone that actually thinks it's going to collapse. You know what I mean? It depends. Like when we saw the ARC way out of the money puts,
Right.
and I thought to myself that's a smart trade. And I was looking at that one, really harping on that one. Way out of the money calls tend to make me think there's something is a little funny here.
Right. Okay.
All right.
Okay, cool.
All right, good,
Nice.
good.
That's
One
nice.
name also that I saw that I wanted to make sure that we own calls. Hopefully, people were able to average in. UPS, FedEx. I mean, look, I don't understand, frankly, how I really don't understand how these stocks, aren't going to trade a lot higher. I think, you talk about Visa, MasterCard conglomerates in the payment space. When you talk about UPS and FedEx, I mean, I suspect that the UPS is going to announce a hike in prices. What's going to happen? People are going to they're not going to ship their packages through UPS or FedEx.
Right.
FedEx is going to do the same thing, right?
Mhm.
It's the thing about these stocks is that they were trying to do too much, especially UPS. So they brought this new CEO at UPS, and she is the CEO, former CEO of Home Depot. She's a master at cutting costs. She's
Right.
in
Right.
retail and a master at cutting costs. And now she's at UPS. And UPS, they were doing business for anyone. It's like, you want a package, fine. They had this what's called the loss leader, right? They'll do that last mile. UPS is spending on this whole logistics map, right? They have trucks, they have people, they're spending money on everything that goes along with that, instruments for the truck driver to carry
Right.
I mean, everything, insurance, it's off the charts how to run this logistics business, and yet they're making like a 50 cents, a dollar in a package. This woman comes in, is like, we're not doing that. You got to love that. She just said, we're not doing that. And you know what? We're going to tell the customer we're raising prices on you, and we're just not going to do that, because
Mhm.
think about it, the service they're providing, everybody's online. Right now, online shopping is huge, and it's become the main part of most retailers. So if you're
Yep.
a retailer, the way you get your product to the person's doorstep, that's now a big part of your business. And you're going to tell me I can do that for 50 cents or a dollar? And UPS is going to do it for me, and they're going to do everything? I
Mhm.
mean, this woman walked in and says, that's not happening anymore. Boom, she cut everything. And, we're not going to see that in a quarter or two, 2 months, but she's over there chopping things up and saying, you know what? I think in June, you're going to get the earnings. I think they'll be good. You'll see the cost cutting measures working. And I think they're going to raise prices. And I think they're going to say prices are going up. And if it goes up 10%, guess how much of that 10% they make to the bottom line? 10%. And plus they
Mhm.
lowered costs, which is going to increase margins. So I think you have a situation where UPS and FedEx can start seeing some significant margin expansion. And that's going to be cheered by Wall Street. The big investors are going to say, we love this woman, and we're going to pour more money behind it. I suspect these things have a monster move at some point from, it's done nothing. UPS has done nothing from, August until now. So it's digested this move. UPS is generally a sleepy stock. So it digests this move, but you look at it and you think, you see this 32 million shares day? You see
Mhm.
that day
Yep.
right there?
Huge. Mhm.
Okay, and then the next day over here, it's another 10 million shares. This is, to some extent, I mean, it's pretty clear to see, this is a brand new stock. Okay, it might as well be UPS is at zero. Okay, and this is a brand new stock. There are big buyers here that said, we like what's happening here. We like what's going on. We're going to buy the stock, and we see value at 155. Now, 175, you still have some of these people probably taking profits. So this is the digestion mode. This is, things goes up here. This is how a stock digests this type of move.
Right.
Okay, so digestion over here. This is the move. Now we're looking for 175. Well, you got FedEx coming out next week. So the reason we're talking about UPS is because FedEx is coming out next week, and they have chart's going to look fairly the same, probably a little bit better because it's sort of had its move down already here. This is a move down, and it's starting to creep back up. So you want FedEx to say something positive. A positive announcement for FedEx has good implications for UPS. But what do we need to know? I mean, there's nothing we need to know. Everybody's shipping online. I guess the negative is that things are opening up and people are not going to buy anything anymore. I don't believe that's going to happen. I just think that it's just going to keep on. Frankly, most of it's in the fourth quarter anyway. We're shopping and things are going to explode again. So you have this FedEx coming in here, and you have earnings next week. People are buying. You see the at the money vol is 63. People are
Yep.
buying these earnings. They're buying the 270s here and paying up $10. Okay, mind you, $10 for the 270s. And so that's $1 million in premium here. They're buying these. if you're doing that for 270, you got to be thinking 295. You wouldn't do it otherwise. And if you get to 295, 300, you're getting close to a breakout level. If that's happening at FDX, what usually you'll see people do is they try to, you see the vol is only 26 here. It's somewhat depressed. So UPS is at 168. You see them taking a shot here for next week, even though there's no event. The event is their competitor FDX is going to come out and say something.
Right. Okay.
Makes sense?
Nice. I love it.
Good. So these are names. Look, there's some of these are bigger cap names. It's harder to get, positions in. I'm trying my best to, find names like this, but it's just harder when there's bigger names. But, Visa, MasterCard, UPS, FedEx. I mean, these are stocks we love, and lastly, if I got a minute, before we take some else, lastly, I would say, what I want you to think about, look, I love the banks. We've been talking about the banks, love the banks. But what I want you to consider is that, at some point, if you're in the banks and you're looking at the banks, at some point, you just got to keep track of this, because if you have this rebalance, I'm kind of hoping, to be honest, I don't have a pure bank play on, but if I'm hoping for, let's say hoping, and hoping is a bad word in this game, but I'm looking for a rebalance. Hopefully I see the TLTs trade back to 145, 146 on this just rebalance trade, right? Where a lot of money's coming in back into bonds just because, and I can get this move back here. If I get this move back here, this needs a little bit of imagination, but if I can get this move back here, then bonds up, interest rates down. Interest rates down is, you're going to start seeing, JP Morgan, Bank of America, interest rates down, might see this come back towards maybe 145, 142. And that would be a really good sort of entry level for this bank's, maybe a next leg up. Does that make sense?
Right. Yeah.
So that's how, I do I want to reach here? I've been holding off because it trades fantastic. The banks, they trade unbelievable. We've been talking about them since probably mid-February, but they trade fantastic and all of them. And, I'm just looking for what's going to make this come down, because this is an explosive situation. Can we get an artificial press up with bonds? And that might be my entry point, because it'll be interest rates. Bonds go up, interest rates down, banks yield curve probably comes off a little bit. And so the banks sell off on that. Maybe you only get 147, but I want to be somewhere in this pocket where I'm waiting.
I see.
Make sense?
Nice. Yes. Cool.
Okay, good.
Awesome. All right. Let me pull up a question real quick.
Sure.
Oops. Here it is.
I don't usually roll singles that are winners, but if the directional thesis is still on, does it make sense to roll to further strike to take advantage of convexity? So when you're saying that, I'm assuming that you are talking about rolling up. So taking one contract and then rolling it to a higher strike. So convexity in this world means a little bit of leverage. So you go to, with calls, you go to a higher strike. With puts, you go to a lower strike. So would you do that if the thesis still stands? I would say if the thesis still stands, then yeah. I mean, it's not a terrible way of, it's not a terrible way of actually taking some money off the table and just buying the same contract amount with a different, with a smaller price tag on it. I don't generally do that, because what we're doing is essentially, we're catching, we're throwing away or taking profits as it goes up, instead of just, you can roll it by keeping the same amount of dollars, or reducing your dollars, but keeping the same bet on, the delta bet on, the directional bet on. It gets a little bit tricky on which one you should do. How should you do it? How much should you do? So the easiest way for the beginner is to simply just take a third off, a third off, a third off. We're keeping the position on. If the thesis still stands, then as it goes to 100, rolling, some people, and there are big hedge fund guys that they will take their whole position and roll it up. So you paid $1, it goes to 250, right? 150%. They take the whole 250 off, and then they buy a dollar option higher, wherever that is, a couple of strikes up. So now they've taken their money off the table and made a little bit of profit, and now they have a dollar option if it keeps on continuing. That's the convexity. That's sort of like you can buy more. You can take off the 250 $2.50, you buy 150, and then buy, that's only a 10 lot, and then you could buy 25 of the dollar kind. That gets you the same 250 back, but that's just compounding the leverage, just like
Right.
adding the leverage, and you never took anything off. And if you have one bad day, then that situation is going to crumble. So that's why I don't see people doubling usually. I do see people buying 10 lots. They buy a 10 lot, 10,000, 100,000, whatever, 10 lot. They pay $1, it goes to 250. They sell the whole thing. They don't wait for that. They sell the whole thing at $2.50, and then they buy a 10 lot of a dollar kind that's higher, strike that's higher. What
They
we're
take the
doing is
profit and then
they
just
take
put
the
that
profit
dollar
up.
up. Right.
What we're doing is we are buying a 10 lot. It goes up to 250 or to 250. We're selling 2, then 4, then 6, then 8, then 10, or 3, 6, 9, and 1, whatever we're doing. But we're taking some off. We have a similar bet on, unless the stock really takes off. And if the stock really takes off, then it would have been better to buy that higher strike for the convexity, because you're going to get higher percentage gains there. So it's a give and take. It's a give and take, and it context matters. But yes, that is fair to do, and people do it, and that's how you would think about it.
Cool. Okay.
All right.
I think that answers it.
Cool.
Yep. Nice.
Awesome, man. What else is there? Anything else? One more question?
We can discuss protection for stock options that will not be sold.
I would say look
one.
at go ahead. You have another one? Go ahead.
Yeah. Okay. So here it is.
Maybe you can discuss protection of a stock position that will not be sold by using options. Protection of a stock position that will not be sold by using options. So that means you own a stock. So Mark, you own a stock. You want to protect it, but you don't want to sell the stock. Is that right? I'll wait for his answer. Where's Mark?
Yeah.
Because I just want to answer his question. So I think that's what he means. You can discuss protection of a stock position that will not be sold. Fine. So protection of a stock position starts with immediately you can think of puts, buying puts. If you like something that much, if you like a position that much, then buying outright puts may not be the protection that you actually want. You might want to do a put spread. So you do some wide put spread, and then you can sell to finance that. You could actually sell a way out of the money call. So let's just take let's take a look at JP Morgan just because it's on the board. 155. So the stock's up from 130 to 155, and you're nervous about, you're long the stock and you're nervous about maybe it moving lower, but you want to hold this for a while. This is a name that you're thinking, okay, I want to hold it. So you got to find something that might move it. It might be this bond thing that we're talking about. So April 1st, but maybe you look at April's, because that's when earnings comes. So we look at April, and in JP Morgan, I would look at where can this go down. So 155, maybe if the market does trade lower, maybe it drops to like 130, 135. Okay, so I want to protect somewhere between 150 and 135, right? So let's frame it on one side here. Okay, so I'm looking at 142. I'm looking at 127. And then we're looking all the way down here at 112 and a half. So, which is interesting again, right? 15, 15, 15. And the way it's working, 147, 15 be 157. So I'm looking at protecting somewhere around here. Okay, call it, or maybe even the 145s. Let's say something like the 145s to the 130s. 145s to 130s, kind of like what I'm looking at. All right.
Okay.
That's what I want to protect. How would I do that? So I'm going to look at April. I'm looking at April because that's the event. 145 to, let's call it 150 even to the 135s. So this is 380 and 90. So that's $2.90 for that. You see that? If I buy the 150s and sell the 135s, so that's, let's call it $3. I'm just going to call it $3. I pay $3 for that. So far, so good.
Yep.
And I want to sell, maybe I want to sell the 165s. That gives me 10 points of room. We talked about, you might even want to sell the 60s, but that's a little bit close because you don't want to get taken out. We talked about 157, 15, 15, 15, walking this up. Maybe you get something all the way up to like 160, 165, somewhere around here. Right. So
Right.
we're talking somewhere in this vicinity. Now I can actually buy, I can move this up. I can move this up to the 150 line in JP Morgan. And then I would sell the 165 calls at around $190, $2. So $3 plus $2, minus $2 is $1. So net for that structure, I can protect JP Morgan from 150 to 135. I'll make back that money, and I can protect from I can stay in the trade up until 165. Above 165, I got to release sort of that to the market. I can't make any more than that 165. So if it shoots up, so it goes to 180, 190, 200, then you are not going to get those trades. So, and it's give and take. So that would be one way that I like protecting, because it's, if you're going to be long the name, you're probably a better buyer of the stock down 20 points. And so the put spread, giving up an upside call, to me sounds like a pretty good deal.
Nice.
Okay.
I like that. Great.
And you can do that. Yesterday, we were doing it the opposite. On a downdraft, if you want to buy stock, you can sell a put, especially volatility goes up. You could sell a put, and then you can buy and at the money, and then a higher out of the money call spread. All right. Taking advantage of higher vol and getting situated where stock's already down 20, 30%. And now I can get in the name without putting up that much money. I got to put up same margin, but I can put up, I'm reducing I'm basically creating this area around the stock below that I don't have to get in. So that's on the buy side. Here, this would be protecting the opposite, where you're buying a put spread, selling an upside call.
Nice. Great.
Okay.
Cool.
Awesome.
What was the one you wanted to go over?
One name that I just, that I wanted to look at was some of these. I really just wanted to go quickly over these. Tech has gotten decimated, but Snap is trading well today. Pins is trading well. The
Social media.
These stocks, social media names. We see Facebook. Facebook looks like it wants to be bought, but something like this, this pins here. We'll just look at this. Is clearly something is going on right around this level. Okay, this broke here. You see how this broke here and here, and it's trying to recapture that today. So that's interesting to me. You're looking for this move back to around here. I suspect that once it gets to about 80, it's going to need the market to go up here, but it could probably, with just the market hanging around here, it could probably get to 170 to 70, 78, 80 on its own. And then you got this to worry about. So, I'm looking for something around here. A good market takes us back towards 100 in this name. Same thing if you look at snaps. These names are getting hurt because a couple of things, but the main reason is that the market's opening up. People are not going to be in the home watching their phone or their computer or being on social media. I actually don't think so. I think it's once you're on it, you're addicted. Whether you're outside on the train, you're still going to be all over social media. But and things are going to shift.
Yeah.
In pins, it's okay. People are not going to be looking at how to build a shed in my garage, but they'll be looking at where I'm going on vacation and pictures of vacation homes and vacation this, vacation that, and where they're going, and baseball and football that's open up, or their sports players. They're just going to be looking at a lot of different things. It's just going to switch. So that's pins. We have same thing I wanted to point out, like Snap. Same thing. This is a sharp move higher, and then a very sharp move lower. Down from 73 down to 52. I suspect the same thing. I think it could get on its own. It can get back to 62, 65. But again, this has been trading very, very well. The other news to keep in mind, you should probably read about it, is Google's advertising and the ability to use third party data. I think that might be something that's weighing on these things, but I think the industry is going to have a solution. Otherwise, it's net negative for a lot of people, and it's game changing. But I can't see how Google will blow up their whole business. I just think that Google will probably win the most, but these guys will all be okay. So these are social media names that I like as well, and that are trading well, and seeing some call buying there.
Cool. Nice. Nice. Nice.
Alrighty.
Cool. Great.
I think that's it. I think if we have one last question or one last thing, I can actually I got 4 minutes.
We actually got a comment on FUTU. Let me
FUTU.
pull it up. Yes. Here it is. Here's the comment.
Chike Young, you guys did a great job of adding FUTU last week's video. Much appreciated. Sorry to sound like a broken record, but I've never seen a chart like today's. What are your thoughts in FUTU? The Robin Hood of China. Whatever happened here? The Robin Hood of China. What did I do? FUTU. Okay, so I mean, we talked about, let's see here. What should I do here? Let's do a little bit closer just to get 4 months. Do we want? Yeah, we'll take 4 months. So if I'm looking at this chart, you know, what do I see? I don't see, this is a steep move, but and it does kind of this, you know, I don't see the mountain. That's the mountain trade, right? That's the mountain. This is actually something that's kind of like doing this thing over the course of a month. You know, is this a daily? Yeah, this is a daily. It's sort of doing this dance, and it's even did something a little bit more like this. When is the Robinhood IPO? I don't know off the top of my head, but I suspect it's and you have this sort of gap here. So, you know, you have it down here. I mean, we can use this one if you want 120, but somewhere around this range, 120, 130 is there's something going on there for whatever reason. So what do I see here? I don't see a mountain trade like like this. To me, this does look like it could actually make a run here higher. Frankly, I'm not. I wouldn't say this looks like your typical mountain. So it means that there's buyers here, and you know, I think the news is we've always said it since, where was it? Since here, we were around here, right? When FUTU, we were talking about this literally right here, and we talked about the event, what I thought the event, which made sense, what I thought the event would be is Robinhood IPO, right? People are going to say it's an easy story. The Robinhood IPO is 21 billion. Robinhood just trades up on the day. It's $30 billion. So if that's $30 billion, how much is FUTU, which is the Robinhood of China? How much is that? That's, you know, that's how people tend to, that's, you're comparing apples to apples, right? And you're trying to say Robinhood and Robinhood of China. How come this one is worth 30 billion and this one's only worth 15? And China has, you know, 8 times the number of people that will be trading on their app, and you know, right. And that's how they do it. And they just say, well, something is wrong here. Just like I did with the TLT to SPY. Hey, last week TLTs were here, SPYs were getting killed. Today TLTs are here and SPYs are through the roof. You know, there's something wrong. So people look at the relativeness of two assets and they say, okay, this one's moving up. Well, people are going to jump onto this one just because it's that easy to make the comparison. Same thing with NEO and Tesla. Same thing with any of these. So I would say that this is something that it could go down. And I think if it breaks, remember, these are 150 vol names. So if it breaks 120, I think it's starting to break down and it's going to make a next move towards 95 and then probably here 70. And then it's going to come right back where it goes. And most likely everything goes back to where it started. But in the meantime, give me the Robinhood date of the IPO. Give me that sort of week. And I think you'll start seeing a flurry into that week for FUTU. And I know that thing's heating up. So, you know, maybe it's coming sooner than everybody thinks.
And you see how narrow it is today. It hasn't moved at all almost. You see the
Yeah, no, definitely. Yeah. It's probably, let's look at FUTU. You know, what when it does that, it probably means that the 160 calls. So the 160 calls, 160, yeah. Not much open interest. It's expensive even for 1-day options, $10 straddle. So
Right.
look, I would simply say these, when you get these names like this, the market, especially after you've had a down move, the market makers, when it's going, notice, I want you to actually notice something about the whole market just in general. As it was going here, where were the volatilities? The volatilities were 150, 200, 210. Now, if you look, the volatility is, 125. This FUTU was 200. So the volatilities have come in relative to where they were
Mhm.
because we said this yesterday, because there's now players in the game, right? There before, as the stock was going up, there was every person that was buying up here was like a new buyer, right? Now you have people in the game all the way up. So when you're on this side of the fence and it does this, there's this dance of, all right, those people selling out, these people coming back in, that and selling, buying sort of squashes things. That's why you see, UPS straight for six months after it makes a big move. It's called digesting the move. And that's what I see here. But yeah, this is pretty nuts, I guess, if you want to say. It's pretty nuts means it's moving up and down $4. I mean, it's still up and down 2%. So keep that in mind.
Cool. Great.
All right.
Perfect.
That's my time.
Thank you, Felix. Thanks,
All right.
everybody.
Thank you, guys.
Make sure you like the
All
video,
right. Make sure
subscribe.
you like. Yes.
We'll see you next week. All right.
Be good. Bye.
Bye.